Our regular viewers will know that both Ben and I are working towards financial freedom, and if we keep hustling, there is a good chance of reaching this within 5 years. To achieve this, we are each targeting a passive income of around 20 grand per year, so using the 4% safe withdrawal rate, it means we each need an investment pot of 500 grand.
At that point, we can live a basic lifestyle in perpetuity without worry, though we may then decide to keep going to millionaire status, but freedom will have been guaranteed. We both truly believe that we will eventually hit this basic freedom milestone, but there is one major obstacle which could derail it. This concern has grown recently as our business continues to expand and we creep closer to the finish line.
I recently read an article about a Star Wars voice actor who was left unable to speak after suffering a stroke. Although the guy is still very competent and very much himself, sadly he will likely never be able to do voiceover work again. It seems his ability to make a good income will be forever dented.
While this is extremely sad, it just highlighted the importance of achieving financial freedom quickly. But if financial freedom is still a few years away, then is there anything you can do to bring it forward or lock it in today? In this video, we're going to look at the actions that you can take to ensure that your financial freedom is achieved, so that even God himself can't stop you. Let's check it out.
Welcome to moneyandchapel.com, the investment and finance channel and website that sets you and your finances free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe. What is financial freedom? For those new to the channel or to financial freedom, let's quickly define it. We consider financial freedom to be the ability to never have to work a day in your life again. You can achieve this by building up investments or financial assets that will pay you enough income until you kick the bucket. As mentioned, our figure, and probably what most people want, is a 500 grand pot.
There are many ways to achieve this. One way is to earn a high salary and invest a substantial amount each month. Another is to start a business and grow it into an empire. Whichever approach you're doing, what happens if you lose your capacity to work? It's a very dangerous period between now and your financial freedom date. Only intelligence and hard work will allow you to win freedom. So assuming you have this, here's how you can ensure your financial freedom.
Insurance. We've never been the biggest supporters of insurance because on average you spend more on premiums than you receive back in cover. Generally, if you can afford to self-insure, then this will work out financially better for you. But some outlays are too significant to cover with your own savings. For example, a house burning down would likely financially ruin you, so get this insured. But for mobile phone insurance, just self-insure, which simply means to put money aside in a provision in case the worst should happen.
Perhaps the most significant cost to us would be to have our financial freedoms taken away by chance or misfortune, so we want to lock in our financial freedom today. Then whatever happens, we would never have to worry about money. To do this, we can use income protection insurance to bridge the gap between now and whatever date we achieve financial freedom.
At that point, you can cancel the insurance, as sickness or injury would no longer financially ruin you. We've never seen any other financial independence devotee do this, so hopefully this strategy will be an eye-opener to most people.
Income protection insurance. According to the Money Advice Service, each year 1 million people in the UK find themselves unable to work due to a serious illness or injury. Income protection insurance is designed to give you some cover if you can't earn an income for those reasons.
Surprisingly, it isn't that expensive considering the cover that you get. But nevertheless, we don't want to pay premiums for decades for something that we may never use. And just to point out the obvious, we don't ever want to have to use it either. We plan to only have the cover between now and the date we achieve the magic financial freedom number.
The level of cover you can get will vary, but generally, and what we're using it for, is to receive a payment based on a percentage of our current income until we retire at old age. As the state pension kicks in for our generation at 68, it makes sense to have the payout last until then, at which point the insurance payouts stop and the state pension and any of your private investments kick in.
Many income protection policies have a very short payment period of 1 or 2 years, for example. These don't make much sense to us for young people because they don't cover against long-term injury or illness. But remember, we're not financial advisors, so please do your own research and speak to a professional if you're unsure of anything.
What does it cost and what will I get? This really does depend on the level of cover that you want, but to give you an idea, we ran some quotes through a comparison site and also spoke to an insurance broker directly.
We asked them what payout a 32-year-old could get, based on a current salary of 24 grand, which is about the average for a young UK worker. If you're self-employed, you will need to be able to prove your income. It can't be based on forecasts or wishful thinking.
We asked for the benefit period to last until age 68, and the longer this is, the higher the monthly premiums that you have to pay will be. The highest benefit amount was 65% of your earnings, meaning on a current salary of £2,000 a month, the payout is £1,300. Personally, we think the minimum for basic financial freedom is around £1,650 per month, which is £20,000 per year, so a payout of £1,300 falls just short of this.
Unfortunately, we're unaware of any insurance like this that will cover more than a set percentage of your current earnings. We assume this is because everyone would insure themselves for millions and then go throw themselves deliberately into a wall or off a ladder.
The good news is, and assuming this doesn't change how the insurance quote is calculated, you would only need a salary or income of around £30,500 to get a policy paying out £1,650 per month. The other important factor in this type of insurance is the length of time you have to wait before a claim is payable, known as the excess period. In this example, we opted for 90 days. The more you are able to wait, the more it reduces the amount you have to pay in monthly premiums to insure yourself.
This means if you are unable to work for say 70 days, then you would receive no payout from the insurance policy. Only after the 90-day excess period will the payout start until you return back to work or until age 68 based on this particular policy. And finally, we made sure the policy was index linked so that the payout increases each year with inflation. 30 years of inflation would annihilate the buying power of any money you receive, so indexation is critical for long-term cover.
All this and the quote came in at around £28.40 a month. If you're like us and think that you can achieve financial freedom in a few years, then this seems like a very reasonable insurance product to make sure that you get to the line. As a recap, this policy was based on a 32-year-old covering 65% of a £24,000 salary with payouts lasting until age 68 with a wait or excess period of 90 days.
Other things worth mentioning. Don't worry too much if your existing salary or income is not yet sufficient to get an adequate payout. The insurance policies are rolling, so you can cancel or renegotiate at any point. So in 2 years' time, when you get that juicy pay rise or your business starts to take off, you can rearrange the policy based on that higher income then.
Also, and this is key, for personal policies the payouts are generally tax-free, which is why most insurers will only allow you to insure 65% of your gross income, as it works out approximately the same as your net income.
And lastly, the type of insurance we were looking at is known as own occupation. This means the insurer will pay out if you are unable to do your own occupation, even if you could do something else. For example, if I lost my ability to speak, I would no longer be able to do these YouTube videos, in which case I would be able to claim on the policy.
It's worth bearing in mind that you might be able to claim state benefits if you were unable to work, but they would first expect you to do any job, no matter how unsuitable, low paid or depressing it might be.
Where to buy? As with most insurance, the best thing to do is to get a quote from a price comparison site, ideally one specialising in this type of life insurance. We've personally tried and tested Assured Futures, and we were very impressed with their service and the advice provided. Don't just take our word for it though. Assured Futures is 5-star rated on Trustpilot and is FCA regulated, so you know you're in safe hands. Visit the site using the link below or give them a call with the number on screen to get a tailored quote.
Is the state pension enough at 68? No, definitely not. And we need to assume that the state pension may not even exist in several decades anyway, but fear not. Hopefully you've already built up a small investment pot that will continue to grow, so by the time the income protection insurance runs out, your juicy investments will be large enough to step in and save the day.
Using our ages as the starting point, we have 36 years until this insurance product ends at age 68. This gives us 36 years of awesome compounding stock market returns to get to the magical 500k figure. Assuming a 5% real rate of return, you would need an investment pot of £86,000 now. Remember, this is all your financial wealth, so includes ISAs and pensions. This might seem like a difficult sum to acquire for many people, but for those taking financial freedom seriously, we think it's very attainable.
Supplementary ways to lock in financial freedom. Number 1, diversify your financial capital. Financial freedom is primarily achieved through the building of an impressive investment pot. While you are young, it's important to take on a suitable level of risk by investing in a predominantly stocks-based portfolio or other assets that are likely to grow substantially over the years. This gives the investment pot as much chance as possible in growing to the required size.
When you're young, you might just want to hold global stocks, but as you age, it's a good idea to diversify across more asset classes, such as precious metals and bonds. In a way, this is just another form of insurance. With insurance products, you pay premiums, whereas with an investment portfolio, certain asset classes will provide stability at the cost of lower growth prospects.
Number 2, diversify your human capital. A lot of people, too many people, learn a skill and then try and live on that skill for the rest of their life. This is a risky and foolish strategy because the world moves so fast now that an essential skill today could be obsolete tomorrow.
Human capital is your ability to work and make money through your time, skills, and experience. We would encourage everyone to be a jack of all trades rather than have one specialisation, because one specialty puts you at severe risk. Better yet, try to specialise in multiple skills.
I recall seeing in the news numerous times that when an industry ends in the UK, such as coal mining or steelworks, there are always some unsuspecting workers who are caught off guard, wondering how they will survive. The ones that make the news are often in their 50s with no other marketable skills. Don't be like them. Make sure you have a wide range of skills so your human capital is diversified.
Question of the day. Do you think ensuring your financial freedom is necessary, and will you be taking a policy out? Or will you be taking the risk? Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyonshackled.com. See you next time.